My name is Kai. Let's talk about AI. And this is my little doggy, Nutella, next to me, who doesn't seem to be that interested in the topic. So whether you like AI or not, is certainly a topic that's not going to disappear anytime soon. If anything, it's only going to get more and more. And of course, a lot of us investors want to get in on the action, right? AI is continuing to boom. Companies in the space absolutely exploding in terms of valuation. So how can we get in as investors? And that's exactly what I want to talk to you about in this video, to show you different ways how you can invest. AI is not just one thing that you can invest, especially now that it touches so many different industries and parts of our lives. I want to give you a framework and guide of how you can think about it and allocate your money towards it if you want to. Of course, this is not investing advice. Think of it as a how-to rather than what to do with your money. The market is absolutely continuing to grow. I mean, the valuations are through the roof. Some say even overvalued. Again, I can't predict the future, but it's definitely continuing to grow. Going forward, it's only going to get more and more when we see some of the big companies we'll speak about in a moment, when we see how much of the capital expenditure and money they're allocating towards growing the AI output and intelligence in that space is just mind-boggling, and those valuations are continuing to skyrocket. So yeah, I don't think there's any slowing down in that sector anytime soon. I want to talk about 3 layers of how you should think about investing into AI. The first layer is the infrastructure layer, right? That's kind of the basis for all AI related things, right? AI doesn't just, grow on the trees or, happen in the cloud. Well, it does happen in the cloud in a way, but that cloud compute comes from somewhere. And the real basis for that, of course, are chips. And no, I'm not talking about these kind of chips. I'm talking about these kind of chips that are literally built into everything we use these days, all digital products, and especially for AI, there's just no way around it. All this AI hype that we're seeing and experiencing ourselves would not be possible without those chips specifically made for AI. Think of it as investing into the companies selling the shovels during the gold rush, right? You're not investing directly into the gold, but you're kind of benefiting from it because the companies producing shovels for people to dig out the gold, they equally made a lot of money from that, right? So here it's really, I would say, the basis, the infrastructure to benefit from AI. And obviously, as you can see, the biggest player right now in the space is Nvidia. There's no way around it. Right now, it's the most valuable company in the world. Now currently at the market cap of $4 trillion. I mean, absolutely mind-boggling numbers. They have around an 87% market share. Of course, you have some other players as well, from China, but also in the US, AMD and so forth, Intel, where the US government now took a stake in. So, the space is heating up, but definitely Nvidia has a clear lead in that space. So you could choose, either to invest into Nvidia or any of the competitors if you see upside potential there. But most of the companies in the space will certainly be benefiting from that AI hype, because that's really the backbone of AI to scale and grow even further. The second layer are the AI platforms, or hyperscalers, as they're referred to sometimes. And here we talk about really the big 3, if you want: Microsoft, AWS, and Google, that really provide a cloud compute, right? A lot of the AI happens on the cloud, right? If you speak to ChatGPT on the phone, it actually sends it to the cloud, processes it over there, and then sends it back to your phone. And those players are really needed. If you just have the chips laying around, not doing anything, well, there's no use for it, right? You need those 2 parties to work together. The platforms need the chips, and the chips need the platforms to operate. So here we have right now, as I said, 3 main players. Of course, there are other players out there as well, like Oracle and others, but those 3 really have the biggest share out there. And of all of them, Amazon is still in the lead, but Microsoft and Google are catching up, certainly in terms of market share in the cloud. But yeah, those 3 are definitely some good bets if you wanted to benefit from AI in the future. And of course, the great thing with those companies, they're not only basing their future on data and cloud services, but they have so many other businesses around it as well. So you're quite diversified in a way, while technically with Nvidia, you're really focusing more on the hardware part, right? They also have some software elements, but definitely much more hardware. And yeah, that's just something to keep in mind there. And thirdly, we come to the application layer. So here you really have companies that sort of sit on top of it, right? You have the basis, the infrastructure, as I said, the chip providers, then you have the hyperscalers, the cloud providers, and on top of it, you have the application layer. Companies like Palantir is one of the big examples and most prominent one that has grown, right? They wouldn't be able to do what they do if they didn't have the chips, nor the infrastructure and compute power that they're being provided with from those other companies that are actually working with Palantir, some of those for sure. So yeah, that's something to keep in mind. They need each other, right? They're really all intertwined in the same way how those companies would not be offering and benefiting so much from the cloud business if those application layers and companies wouldn't pay them for the compute power, right? So you can see how it's all intertwined and coming together there. Now, obviously, I gave one example as Palantir over here, but really, I think in the future, you can basically think of any company and they would be sitting on top of it. Salesforce, for example, another company, big CRM company, of course, they're going to be investing a lot of money into AI and, of course, utilizing both the platforms and the chips to get that compute and intelligence out to their users. And while I do think we can see some major growth on the application layer, I think it's also much more complicated and difficult to predict who's going to win, right? Because here we already have some bigger player established. You kind of know the direction of it. Here it could really change very quickly. So I'm sure in the future we're going to see more and more companies in the NASDAQ 100, S&P 500, very strong AI-focused companies that really focus purely on AI coming up the space with crazy valuations. I don't know who they're going to be, but I think we're going to see more and more of that pushing away those traditional companies. The valuations are going to be through the roof, because also keep in mind, those AI companies are of course going to be much more profitable in many cases. Not all of them will be, but if they get the right business model working, then the expenses could be significantly less than, for example, some traditional companies in manufacturing or insurance business or whatever it might be, right? Now, some others say that's just a hype and a bubble right there. Who knows? We'll see. But I'm pretty sure we're going to see more and more valuations like we see with Palantir, which for me is crazy high, right? We see this right now. But yeah, that's just the reality of people placing big bets on those AI application companies going forward. Now, of course, some of us would also love to invest directly into big AI companies and LLM companies that are leading the space. For example, Claude or OpenAI's ChatGPT, right? It would be amazing. Unfortunately, it's not possible right now because those companies are not stock listed yet. Maybe they will be. I'm pretty sure they will go to the market eventually, but right now you can't really do that. I've seen Robinhood, in some parts of the world trying to sell shares to investors pre-IPO, but then again, they kind of backtracked it because it wasn't really actually, possible. So yeah, well, remains to be seen. Of course, again, in Google, you could technically already benefit from the Gemini application, right? Because it's already baked into the company business model, so to say, right? So if you invest in Google, Alphabet, you will benefit from the success of Gemini if you see that. And that's what I said. I think on the third application level, we're going to see more and more companies entering the space, and it's really going to be a race to the top of who gets the juiciest valuations. But of course, this goes back to individual stock picking and trying to find the next winner, which can be very difficult. And that's why I'm a big fan of ETF investing. I do the same with my money, for example, into the NASDAQ 100 and S&P 500. But some of you might also want to have an ETF in the AI space, and it is possible, right? Here, for example, you see an overview of AI ETFs in the space, right? And that's really cool because that way, with a relatively low expense ratio, you can see it, they're traditionally a bit higher than, for example, NASDAQ 100, but you're really going to be concentrated on AI. So if you're really bullish on AI, but not sure whether you want to invest in the first layer, second or third, or which company to pick exactly, you have the options. You see all these various ETFs out there. There are many more, the ARK ETFs, X-Trackers, of course, iShares from BlackRock. So many different ETFs out there. Let's just pick up one over here, one with the bigger fund size. You see here the X-Trackers, Artificial Intelligence ETF. You can see it was already launched back in 2019, so around quite a while with 92 holdings, physical replication. The dividends are accumulated, not paid out, which is good. Obviously, dividends generally are quite low in the space because they reinvest a lot of their money. You want to reinvest into growth because that's very important. Mostly mature companies, they pay a bigger dividend. So yeah, I think expense ratio is really not too bad. I pay 0.3%, for example, for my NASDAQ 100 ETF. So I think it's pretty fair. So let's look into the holdings, what is actually in there. And you can see it's pretty heavily skewed at the top. 43% of all the companies, the 92 companies, are made up by the top 10. So pretty heavy holding over there. But then you have, of course, companies like Meta, Oracle, Microsoft, Nvidia, SAP. That's kind of a German AI company. I wouldn't really consider them an AI company, but they're kind of in the space. They would be sitting more at the application layer. Then we have Bank of America, which is kind of surprising. But yeah, Amazon, Palantir, of course, Alphabet, and Cisco. So generally quite a nice mix between all three different layers. You see here the different countries. Diversified. Of course, let's be honest, majority of that comes right now, especially in terms of valuations, from the US. And you see the sector breakdown, mostly on technology, a bit of telecommunication and financials. So I think that's a great way of getting exposure, additional exposure to AI if you really believe in it, without having to pick, where exactly to allocate your money towards. Now, having said that, at the same time, when you look at, for example, the S&P 500, that's the one I'm investing in myself right now. You can see expense ratio significantly cheaper. Now, let's look at the holdings. Well, guess what? A lot of those are very similar and are also very AI heavy, right? Nvidia, we spoke about Microsoft, Apple. Well, Apple kind of missed the boat on AI, but I hope they catch up. They have the funds to do so, even if they acquire, some of the other platforms. I'm sure they will get there eventually. Yeah, so hopefully they do. Being a big Apple fanboy, quite disappointed with what they've done so far, but I'm sure they'll get there eventually. Amazon, we spoke about, Meta, Broadcom, Alphabet, Berkshire Hathaway, probably the least AI play out of all of them, but that's fine, right? You also have diversification, then Tesla and Alphabet. So these are the top 10 over here. So what I'm saying is, long term, I think as those AI companies increase in valuations and obviously in revenue and importance to the global markets, and in this case, US markets specifically, Well, guess what? We're going to see more and more of those players entering the S&P 500 and rising to the top, right? You're not going to see here all of a sudden Coca-Cola as one of the most top 10 valuable companies in the world, or in the US in this case, because, well, they're not really heavily going after AI. It doesn't make sense for their business model, right? They might integrate and so forth, but their valuations are not coming anywhere close to some of those companies here at the top. So I think naturally we're going to see more and more AI entering our portfolios. Again, whether you like it or not, it's going to happen. So it's a question whether you want to still be diversified across different companies. Some of them are more AI, like we see at the top here, some of them less, in the case of Berkshire Hathaway, and some other ones we have towards the bottom. Or if you really want to double down on AI, then maybe go into some AI specific ETFs. Or of course, lastly, if you're really bullish on some specific companies and their strategy, then why not include a couple of individual buys? I personally done that myself, as you can see, S&P 500 holding Nasdaq 100, but then I also have Amazon and Google, because I really believe in their vision, their strategy going forward in terms of AI, but still being diversified enough, right? They have so many different business avenues to explore, so I'm really bullish on them long term, and well, so far has actually done quite well in my portfolio. That's just one of my brokers that I have. But yeah, that just goes to show you have to find what works for you. Some of you might be more bullish on AI than others, and that's totally fine, right? As I always say, there is no right or wrong way to invest, but I think it's important to understand what are your options, how you can allocate your money, and then you choose what works best for you and your risk versus reward tolerance. Hope you found the video useful. If you have any questions, pop them in the comments down below. Happy to hear from you. Next up, check out this video over here. As always, thanks for watching. Stay healthy, get wealthy, and see you in the next one. Ciao.